So, hello, and a massive hello to everybody. Hope everybody's having a great day wherever you may be, whatever you may be doing. This is 50 Pips, rocking and rolling, 28th of January 2018. No trade calls, no recommendations, every response for their own stuff. We're here for educational purpose only as we head into the last trading days of the month. So it's going to be fairly interesting to see how we trade through what's coming this week, especially as we're going towards the end of the month. Now, I think most people will be focused in terms of data calendar. You know, you've got some interesting data coming in. You know, pretty much throughout the whole week. You know, you've got consumer confidence, you've got Carney speaking, you've got CPIs in Australia. A lot of people are going to be keeping an eye on that. We're going to have Trump speaking. I think a lot of people are going to be focused, of course, not only on the ADP and the Canadian GDP on Wednesday, but especially on crude oil inventories and the FOMC statement, right? Last meeting with Auntie Yellen. And then, you know, as we go into Thursday, we got all the PMIs and ISMs. And then on Friday, you know, the little cherry on top of the cake, as usual, is the non-farm payroll. Now, I think even though that's probably going to be interesting, what I'm a lot more focused on is going to be the dynamic between, are we going to see some kind of a bounce in the dollar, right? A little bit profit taking on the recent move in the dollar at the beginning of the week, but especially how we trade through the end of the month and the mid of the week with this, you know, all these earnings that are coming out. You know, you have to pay attention for that, even if you're thinking, oh, I'm just trading for, you know, this is very, very important, right? We've got a lot of companies, pretty much every company under the sun reporting this week. So we've got Apple, Microsoft, Google, Facebook, PayPal, Boeing, you know, pretty much McDonald's, you know, pretty much every company under the sun is reporting this week. Now it's going to be extremely important and extremely interesting. What I think the most interesting kind of time frame or days is going to be that whole Wednesday and Thursday, right? Why Wednesday and Thursday? Not only because we're bridging over to the new month, but especially because we have Boeing, right? And Boeing's like pretty much this year accounts for a fifth of the Dow gains, right? Because of its weighting in the Dow. And then between that Wednesday, Thursday, then we're going to have, you know, Google, Microsoft, Facebook, Apple, Amazon reporting, and those will probably account, I haven't run the numbers, but they're probably close to 50% of the gains on the NASDAQ, right? So very, very interesting to see how we get through that midweek. Now, what's constructive is that we've seen basically the VIX picking up a little bit, so volatility hasn't been completely dead. We've seen volatility pick up a little bit. So again, if we get some kind of a peak or something, a correction in equities, we suspect, unless some crazy headline hits the wires, for it to come towards that, you know, middle of the week. Now, most people are going to be focused again on, well, by the way, before we do that, just to give you an idea of how silly some of these moves are, you know, maybe some people that haven't been watching the markets for that long don't really comprehend. But, you know, when you've got, let's just look at this ES monthly chart. See if we can load this, right? This classifies as a little bit silly, right? So basically we're up, what, 7-8%, and you'll see that on the ES monthly. You can look at that on the NASDAQ monthly. Fairly silly. Of course, it doesn't mean it's not. If you're long, it's great. But even if you're long, it doesn't matter. The move is just silly is just a funny word, but it's not normal, right? You know, we've already put in Dow. We've put in basically, you know, 7 to 8, 9% moves in the first month, which is what you would expect over time, you know, the markets to put in on a yearly basis, right? So again, there's an awful lot of room to correct to the downside, especially if we go through earnings and we got Boeing disappoints or something and it can't lead the market higher. You would expect the Dow to start to see some profit taking coming in there, right? If we got the NASDAQ pressing higher, and you know, Apple, Amazon, etc., you know, earnings aren't that good, or at least the market can't attract aggressive new buying following those earnings, then you'd expect it to be time for a little bit of a correction, especially because, you know, as we've been highlighting, we've been talking about Apple holding the key at least here short term, and Boeing. And if you look at Apple, you can see that basically it's not looking too hot, right? Of course, anything can happen, but you know, we talked about this pattern. It's looking a little bit heavy here, right? So especially, you know, this is the chance, basically, if people talking about real aggressive melt up in the market, you know, this is the chance the market has to really go full crazy in terms of melt up if we get through these earnings and you see Apple and everything moving aggressively higher, right? If you look at Boeing, similar kind of action, you know, is struggling a little bit. So if on these earnings it can really rip and attract aggressive buyers, then it could be very, very, very aggressive melt up into the end of the week. If not, it would probably be time to see some kind of a healthy correction, right? Oh, by the way, since we're talking about equities, don't forget to keep an eye out on the DAX weekly. Very interesting. I mean, globally speaking, still stuck in a little bit of a choppy zone here at highs. But clearly it's going to be fairly interesting to see how we behave, or how it does, especially after this negative close on the weekly. So dollar, a lot of people saying it's time for the dollar to bounce aggressively. Well, all things being equal, you know, this is as good a place as any to see some kind of a healthy bounce, right? And you see basically the market has tried to stabilize. I think here the important thing for us is not necessarily what it's going to do in terms of the next 20, 40, 50 cents, is still in terms of the bigger picture. Would a little bounce be healthy here? Sure. What does that mean in terms of a bigger correction? Our base case is still that unless we can get a daily close back above the 91s, pops higher or retracements higher should be shallow for this move all the way back into the 87.20s, right? And if it can get back above the 91 with gusto, then we wouldn't be surprised to see it higher. It's still going to have trouble at these 94s, but I just think it's still, you know, you can go back and find some intermediate supports here if you go back far enough on the chart, but we think it could still be very volatile inside this range here, and it doesn't necessarily mean anything. But, you know, if you look at the bigger picture, you know, Aussie, would it be constructive to see a little bit of a pullback here? Sure, but this chart is extremely bullish, right? So unless something really hits the wires, you'd expect the retracement to be shallow and this to continue to try and extend higher, right? If you look at the euro, if you look at it daily, would this be a place to see a little bit of a correction? Sure, but you've got a lot of chop here. So unless it gets back below here, you know, chances are the pullback is shallow and then it just continues to accelerate higher. You know, if you look at something like cable, would this be a healthy place to look for some kind of a retracement? You know, a little bit of a correction, sure, but the chart still remains fairly bullish, right? So again, let's see what happens there. If you of course, you know, a lot of people are talking about crude, and we've been looking at crude a lot. And basically, this is just, to us, it just looks like, again, as usual, it's just a dollar trade, right? As long as the dollar doesn't catch a little bit of a bid, crude's going to continue to grind higher, you know, regardless of positioning, et cetera, it's just going to continue to grind higher. I think the little retracement we're talking about, you know, like as we talked about in that euro, that Aussie, or that DXY chart, would essentially be for crude would be back into this, you know, 62.60, 62.50s, depending on how you want to look at it, but basically depending on the charts you're using. But it's this whole resistance on the weekly that held very, very aggressively back in April, July, October, or April, July of 2015, right? That's a key level. So again, would it be healthy to see a little move back? Sure. We'd expect this level to be very, very strong support. If this breaks, then we think the unwind could be ugly. If that breaks, we would expect to see a move all the way back down into the 200, even if it's going to have to end up bouncing from there, but we think the unwind will be very, very ugly. The line of the sand, as far as we're concerned, is basically, you know, these weekly highs. We trade back below those, then we think the unwind of this very aggressive long position, it could be ugly. To the upside, it's pretty much every round number. You know, any guess is good enough. We'll have to see how this continues to grind. All linked, because again, for once, it's all the same trade. These charts have started to move in sync. You can go back and look at the gold chart. Would it be healthy to see a little bit of a pullback? We were flat on our seasonal trades long pre the FOMC meeting for the move back into those highs, so no position here. But would it be healthy to see a little bit of a correction here? Sure. You know, would we expect this to be a double top for a move all the way back down here? No, not necessarily, not at all. Any kind of correction we'd expect to be shallow. We'd expect the 1300 to be a big bull bear line, and any move into that will probably be a buying opportunity for the next leg higher, unless something crazy hits the wires. And that also means that in terms of ZBs or ZNs, right, the same thing, not an awful lot has changed. We suspect that any kind of bounce would be shallow because it looked like we still had more room to go to the downside on the dollar. And we haven't really changed our opinion. You know, bigger picture, for this to try to stabilize, we need to see it trade back above the 152. But our base case is still that these lows need to be tested before we get a serious or a decent bounce. And if you look at the ZNs, right, let's see if we can pull up the ZN. Here we're still hovering at this big level on the weekly, right? And our base case is still, unless we don't trade back above this zone, so you can call it pretty much, I think it's 122.15 to 123, right? As if we trade back above that zone, then we could see a little bit of a bounce back towards the 50, you know, back into these 125s. But unless we manage to get back above that area, we'd expect this to still trade heavy and try and cause some damage to the downside, okay? So that's pretty much it. Everything's pretty much moving in sync. Should be a very interesting week. So again, heads up, there'll be plenty to do. We expect the fireworks to be stacked up around that Wednesday, Thursday mark, okay? Thank you so much for liking. Thank you so much for sharing. Thank you for all the banter. As always, very much appreciated. Have an awesome one. Talk to you guys soon. Take care. Bye-bye.